Has your mortgage payment been going up and everyone keeps telling you to refinance? Hold up, because refinance is not your only option. There are 3 moves you can make to lower your monthly mortgage payment where you don't have to refinance. That means not resetting that 30-year mortgage again, not paying closing costs, and not guessing what to do. Stay with me, and we'll review those here shortly. For those that are new, welcome to the channel. This is Dexter. On this channel, we cover strategies, tactics, and tools to help you reach your financial goals quicker. So if you have purchased your home either recently or if you've owned it for 10 years or more than likely you've seen your mortgage payment increase, even though you've got a fixed interest rate, haven't changed the loan at all, right? Because we've seen an increase in taxes, we've seen an increase in insurance, and those are some of the drivers that people don't think about because those items are in your escrow account and part of your monthly mortgage payment, right? So before we dig into the 3 levels, let's just unpack what's in your mortgage payment. So typically there are like 5 different components of your mortgage payment. You've got principal, you've got interest, you got taxes, property taxes, and you got homeowners insurance. And the 5th one could be PMI, private mortgage insurance. Now, from an expense standpoint, some homeowners have HOA fees, but typically they are like once a year fees where in most cases they're not included in your mortgage. Could be, but most cases they're not. So as we think about, there are 2 of them that are fixed and not adjustable if you got a fixed rate mortgage. And that is that principal and interest part of your payment. That's going to stay locked, right? But we know property taxes, they increase over time. We know property insurance increase over time. So those components can sometimes, they get forgotten about. So once you get that yearly escrow statement and you're wondering, hey, why is my escrow payment going up? Which subsequently takes my mortgage payment going up. Now we kind of understand it, right? So let's unpack the first strategy that you can take, which is one of the simplest ways you can reduce your mortgage payment, but surprisingly, not a lot of people take advantage of it, which is filing for Homestead Exemption. And Homestead Exemption really is a tax benefit for owner-occupied primary residence owners. That means you own the property, and it's not a rental property, not an Airbnb property, but you live there, right? It's your primary residence. And the way it works, it lowers your taxable value, or it puts a cap from an accelerated standpoint. It reduces from increasing quickly and that kind of thing. So one or the other with the Homestead Exemption. Now, typically, in order to check, to qualify, to see if you qualify, you want to go online to your tax assessors or your county or property appraiser site there for your county, and you want to type in the search bar Homestead Exemption. And what you're looking for there is you're looking for eligibility requirements and you're looking for filing deadline, right? Because we don't want to miss the filing deadline, because if it's April 1st, May 1st, we want to make sure that we get it in there such that it can be applied for that current year, right? For this current year. Now, from a requirement standpoint, typically you're going to have to prove, ownership. You got to prove who you are. So that means from a government identification standpoint, it could be passport, it could be driver's license and that sort of thing. From required documents, they'll have a list there. Also, to prove ownership, if it's a new purchase, you may have to bring some closing documents from a recent purchase. Whereas if you've owned it for a while, could be a utility bill, could be voter registration. They'll have all that listed and identified there from a requirement standpoint. And then how do you file? Once you've filled out the application, you've got all your necessary documents. There are 3 different ways you can file. You can file online, mail it in, or file in person. I know me from my county, it's filing in person here, but I have been in a county before where it was online. So it just kind of depends on where you are in the requirements there. Typically takes several weeks for them to evaluate and get back to you. But once they get back to you, and if you have a reduced number, you want to immediately communicate that to your mortgage lender such that they can then reevaluate your escrow account to lower it, which then subsequently lowers your monthly mortgage payment. Now, key call out there for mistakes. You don't want to think that, hey, that carries over. So if you got it at one property, it doesn't carry over to the next one. You've got to file again. You also don't want to miss that filing deadline, right? So that's critical. And critical one is if you get that reduction, don't not let your lender know. You got to let them know as soon as possible, right? All right, so those are some things that we want to consider from a homestead exemption standpoint. The next strategy where we want to get after is reducing our property insurance. So what we want to do here is reach out to at least 5 different insurers. And first thing we want to do is look at bundling. So if we have not bundled our auto with our homeowners, we want to look at bundling to see what type of rate percentage we can get reduced. This 5%, 10%, 20%, what can we get reduced? And then if we have bundled, we want to look at strategically adjusting our deductibles up. So of course, we want to look at that first apples to apples comparison, then look at what is another level, one tick up and then another tick up from a deductible standpoint. What does that do to our monthly premium? So after we've evaluated those, another consideration while you're at it is look to remove any unnecessary riders, because when you started the policy, you may have been in a different situation than you're in now. So just evaluate everything on your policy. Another key call out to think about from as you having your policy evaluated, most insurers will also check your credit, thinking that, hey, if your credit score is lower, there's a higher likelihood that you will file a claim, versus if you have a higher credit score, it reduces the likelihood in their eyes that you would file a claim. Thus, it would reduce the premium, right? So think about that. So we just want to make sure that we're doing everything we can to be in a good place from a credit standpoint. Just take that in consideration. Now, once we've received and identified, we've reviewed all of them, identified the lowest one, and if it's lower than our current policy that we're paying, we want to get that information to our lender. Typically, they ask for the declaration pages, so we just send the updated declaration pages over. Ask them to then look at an escrow account, reevaluate. That then would be a reduce. And now we've also have reduced mortgage payment again because we've got this insurance portion reduced. Now that's 2 areas. Now you don't have to remember everything here that I'm talking about. I've got a free checklist down in the description. Just download it and just follow those steps there accordingly. Now let's review the third and final strategy for you, which applies to some it doesn't. And that's if you're paying private mortgage insurance, we're going to look to get that removed. So PMI, private mortgage insurance, exists to protect the lender if you've put down 20% or less from a down payment standpoint when you purchase the home. Now, not all lenders require, not for all loans, but a majority of them do have it. What you may have forgotten about if they told you at closing while you were signing those million documents is that once you get to 80% loan to value or less, you can ask to have, request to have PMI, private mortgage insurance, removed. So that's what we're going to talk through here next, right? So the first step is pulling up your current mortgage statement and see what that current mortgage loan balance is, right? We want to see what you owe now. Then secondly, we want to get an estimate of what your property is worth. Now, you don't need a comparative market analysis from a real estate agent or a full-blown appraisal yet. You're just trying to get an estimate to see if you want to request it. So the way we do that is we look at 3 different real estate websites. And for each one, we type in our address and it'll give you a value, an estimated value of your property. And each one is going to give you a different number. So we'll add those 3 up, divide by 3, and that'll give us an average estimate, right? So once we've got our remaining mortgage balance, we divide that by that estimated value of the property. That'll give us a number. It'll be a decimal number. Multiply that by 100. That'll convert it to percentage. Now, if that's less than 80%, we're reaching out to our mortgage lender and saying, hey, what's the process to remove PMI? Now, some of them will do what's called a desk appraisal, where they review the value of your property, their desk, the underwriter will, and he or she, they'll take in consideration, call it foreclosure rate in the area, property value increasing in your area, or staying stagnant, and that sort of thing. And other lenders may say, hey, I need a full-fledged appraisal, and that's something that you would pay for. Now, what you don't mind doing, because in most cases, the PMI is 0.5% to 1% of your mortgage balance, right? The original balance. It doesn't go down as you go down. It stays attached to that original balance when you started the loan, right? So that could be $100 to a couple $100 a month. So we don't mind paying $500 for appraisal if required, knowing that you're going to start saving $100 to a couple $100 a month for the balance of you owning that loan, right? So act accordingly, follow whatever requirements they have there from their process. And then once they've indicated and approved and say, yes, we can remove PMI, now they'll update your payment with that removal in consideration. And now you have a lower mortgage payment. So these are 3 things you can do without refinancing to lower your mortgage payment. You can take advantage of those this week, right? So don't think that you got to, we don't want you to ignore the rising costs of insurance or property taxes. Don't think that refinancing is your only option. And don't think you got to be married to PMI, right? So these are some of the things that we want to work on this week to effectively see if we can start reducing our mortgage payment starting now. So if you found this information helpful, give it a like, subscribe to the channel, and share this video with someone that's got a mortgage. They'll thank you later. Until the next video.